Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's look at some of the stocks on the move today here in Europe. I'm Caroline Hepker and I'm joined by Bloomberg reporter Chloe Millay. I want to get into the details of what's going on with these different stock stories. We may be coming to the tail end of earnings, but actually some really quite interesting ones today. Rolls-Royce is fascinating. They've had a big jump at the start of trading, a big turnaround story.
Yeah, absolutely. And Rolls-Royce, the reason why they're up so massively this morning is because there's a massive buyback. And so, of course, investors are always delighted to get a big buyback like this. So Rolls-Royce is planning to buy back as many shares as £9 billion over the next 2 years. So for context and scale, last year it was a £1 billion buyback. So it's a really massive jump there. And it also raised its midterm earnings targets. So there's two main things that are really driving performance for Rolls-Royce. There's first of all a growing demand for plane engines. So that's both civil aviation and then military aviation. But then the other thing is also there's growing demand for power systems that are used in data centers. So although it's not the first name that we think about when we think of AI, Rolls-Royce is actually a big data center story as well. And so all of that has really been driving the earnings, really driving performance for that company. And analysts at Morgan Stanley said that it was the gift that kept on giving. So it's very much a lot of an analyst and an investor enthusiasm for Rolls-Royce at the moment. And we can see that reflected in that big jump in the shares today, which actually hit a record high.
Yeah, very interesting, isn't it? Especially under the new CEO also, who's been in place since 2023. Rolls-Royce has got those big drivers, hasn't it? Both AI and defence. Let's think about sportswear company Puma sprinting ahead. Never know how to say, is it Puma? Is it Puma? Take your pick. What's behind the jump?
I say Puma, but I don't know if that's correct. But at first glance, it doesn't look too good for Puma. It's expecting another loss this year, removed a dividend. But what investors are really focused on today and what is driving those shares is that the company is trying to position itself for a return to growth in 2027. So the expectation is for 2026 to be a bit of a transition, a year where it will do a lot of different things like liquidate the inventory, rework the marketing strategy, create better direct-to-consumer channels as well, and then also develop new models in really important segments like running and football. And so another thing as well that might have contributed to that optimism this morning is that sales in the fourth quarter were actually a little bit better than expected, especially in the key Asian market. So that was another reason why investors were maybe quite reassured that demand for the products, for Puma's products, was there. And there's just a few changes that need to be made in terms of marketing, in terms of distribution, to get Puma back on track, make it more competitive, make it more efficient. So all of that is being taken as quite encouraging. And there's, signs of a recovery that investors have been waiting for a long time for that company.
Yeah, it'd be interesting, won't it? I mean, the World Cup, the FIFA World Cup, surely Puma apparently may be one of the challenger brands. Obviously, the big ones are Nike and Adidas when it comes to footwear and the clothing and everything for that massive footballing event. Okay, let's think about advertising from another perspective. WPP, very, very painful morning today.
Yeah. I mean, a painful year, a painful couple of years at least for WPP. Investors aren't as enthusiastic about this turnaround as they are with Puma's. So WPP is targeting about £500 million in cost savings by 2028. And it's unveiled some changes to the organizational structure of the company as well. So the idea is to create 4 main units, and that savings will come from eliminating some overlapping functions in places like HR or finance, and then cutting spending on real estate as well. And then with that money saved, reinvest that in growth areas like AI and data. But perhaps this restructuring plan doesn't go far enough in the eyes of investors. Perhaps it's the fact that the expected decline in revenue for this year is looking worse than expected, or it could also be the slash dividend, or actually all three. But in any case, shares are down this morning, and that is actually even without mentioning the AI disruption piece of it as well. So there's a lot of work for WPP to do to get back on track, and that performance gap with the publicist is widening further and further in the meantime.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.